So good to have you join us today. Hello and welcome to the program. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. The U.S. Federal Reserve pulls the trigger and projects 2 more increases this year. How will the latest rate increase affect the Korean market and its economy? We'll sit down with an expert to talk about this. Mortgage rates have been going up, and they're expected to rise even more, with demand expected to surge in Korea's housing market in the latter half of this year. These stories and more coming right up. The U.S. Federal Reserve raised rates by 25 basis points to a range of 0.75% to 1%. And the second rate hike in 3 months was welcomed by Wall Street. Our Arirang starts us off.
The widely expected move was spurred by steady economic growth, strong job gains, and confidence that inflation is rising to the U.S. Central Bank's target of 2%.
Our decision to make another gradual reduction in the amount of policy accommodation reflects the economy's continued progress toward the employment and price stability objectives assigned to us by law.
The decision was approved in a 9-1 vote and marked a convincing step towards normalizing monetary policy. However, the Fed played down any plan to accelerate the pace of monetary tightening, emphasizing that future rate increases would be gradual.
For some time, the committee has judged that if economic conditions evolved as anticipated, gradual increases in the federal funds rate would likely be appropriate to achieve and maintain our objectives. Today's decision is in line with that view and does not represent a reassessment of the economic outlook or of the appropriate course for monetary policy.
The language used by the central bank is similar to that of previous statements, with policymakers sticking to their outlook for 2 more rate hikes this year and 3 more in 2018. The Fed also predicted a 2.1% economic growth for this year, unchanged from the December forecast. U.S. markets jumped after the announcement. The Dow Jones Industrial Average closed 0.5% higher, the S&P rose 0.8%, and the Nasdaq climbed 0.7%. However, the dollar posted steep losses against major currencies. Arirang, Business Daily.
The Korean government says it will watch closely for possible market volatility following the Fed decision. The country's central bank is also finding itself in an increasingly tight spot as pressure builds for it to follow the Fed's lead. Our Kim Min-ji has this report.
The Korean government is vowed to take appropriate market stabilization measures if necessary, following the latest U.S. rate hike. In a widely expected move, the U.S. Federal Reserve raised rates by 25 basis points to a range of 0.75% to 1%.
As the U.S. interest rate has been raised amid uncertainties at home and abroad, the government and related agencies will stay on high alert and monitor financial and foreign exchange situations to prepare for possible market volatility.
Korean shares surged on the Fed's announcement. Seoul's benchmark Kospi added 0.8% to end above 2,150 on Thursday, the highest so far this year.
We may see some volatility going forward with the U.S. rate hike, and in addition, there are concerns about Korea's upcoming presidential election and issues related to the THAAD missile defense system.
As for the country's monetary policy, the Bank of Korea is stuck at a crossroads. Korea's benchmark rate stands at a record low of 1.25%, unchanged since last June. Despite rising concerns about a widening rate gap Korea will have with the U.S. if the Fed stays on course on future rate hikes, the BOK is not in a position to raise rates. Korea faces a household debt pile of over $1.1 trillion and slowing consumption. To keep close tabs on household debt levels, the government is vowed to review the situation on a weekly basis and come up with measures to support people's livelihoods in the first half of this year. For now, a senior BOK official said the central bank won't overreact to the latest U.S. rate hike, nor will it mechanically alter Seoul's monetary policy. He said that although the U.S. rate is an important reference, Korea's rates need to be determined according to local variables in the real economy and the financial market. Kim Min-ji, Business Daily.
And for more on what impact the Fed's rate hike might have on the Korean market and its economy, we have Professor Kim Se-won from Ewha Women's University joining us in the studio today. Great to have you here.
Good afternoon.
All right, so despite concerns of capital outflows following the Fed's rate hike decision, Korean stocks actually opened sharply higher today. What led to this outcome?
Well, after Fed interest rate hike news, KOSPI jumped up to 2,150 level, which is one of the highest after 2008.
Wow.
So this bullish market has been led by foreign investors and domestic institutional investors. And I think there are two major reasons behind this. The first is, even though U.S. Fed is increasing interest rate, they decide to do it at a moderate pace. And the second is, higher interest rate of the United States depreciates Korean won, which is good for Korean companies' profit and their stock price.
Then how long do you think this positive vibe will last? And also, should we not even have to worry about capital outflows?
Well, as of now, massive capital outflow is not a quite possible scenario. In addition to returns, foreign investors are very sensitive on huge depreciation of Korean won. But that is not a realistic story because Korea has a huge trade surplus continuously, and Korea has a large foreign reserve, more than enough, over $370 billion.
Now, after raising rates by 25 basis points on Wednesday, the Fed continued to project 2 more increases this year, signaling more vigilance as inflation approaches its targets. So what would this mean for the markets?
Well, actually, the number of interest hikes by the Fed depends on the speed of U.S. economic growth. Everybody says that U.S. economy is staying on full employment status. That means, technically speaking, every worker who has an intention to work is working at a paying jobs.
Okay.
So that means also, without generating inflation, there's no further economic growth. So if U.S. economic growth exceeds 2% on an annual basis, there could be more than 3 times of the interest hikes. Otherwise, they will stick to interest rate increase by twice by the end of this year.
Now, but then if the Fed raises rates again this year, analysts are saying that this is likely going to put more pressure on the Bank of Korea, who will most likely be forced to raise its rates sometime in the latter half of this year.
Well, whether to increase or decrease interest rate is a really tough question to Bank of Korea. They need to, however, make a decision between containing outflow of capital and promotion of the domestic economy. But it should be noted that higher interest rate from the United States means depreciation of Korean won. That is such a great news for Korean exporting companies. So that effect is as good as decreasing interest rate. So for a while, for the first half of this year, Bank of Korea will be reluctant to increase interest rate.
Now, I think the problem now is that with rates rising at commercial banks, which could put more pressure on Korea's already massive household and corporate debts.
Right. That is the most serious effects on Korean economy. For higher interest rate, domestic interest rate naturally increases without the intervention of Bank of Korea. But we have a large number of marginal companies that do not make enough profit to pay their interest. And the household that is exceeding over 1,300 trillion won. So government should be paying more attention to lessen the burden of these companies and households for avoiding another crisis.
All right, now the latest rate hike reflects U.S. confidence in economic recovery, which, like you said before, which could be a positive catalyst for the Korean economy as well. So, I mean, what are your thoughts on this? Do you think this could bring about more positive vibe to the Korean economy than negative?
Of course, that should be a positive effect in the long run. In countries like Korea, that depends much on foreign countries. The global economic recovery is the most important factor of economic recovery and stock market boom. Along with U.S. kind of fast economic recovery, Chinese economy and European economies are slowing recovery. So if that continues, if global recovery continues, That's going to be the strongest momentum for recovering Korean economy and booming Korean stock market together.
Let's hope to see that
Exactly.
this year. Thank you so much for coming in today.
Thank you very much.
A new report shows Korea's cosmetics exports to China have risen five-fold in the span of just 3 years. It's a timely reminder of Seoul's reliance on the world's second-largest economy as relations between the two countries are strained over the deployment of a U.S. missile defense system THAAD to Korea. The Seoul-based Korea Cosmetic Association said Thursday that the country's cosmetics exports to China approached $1.6 billion last year, up from the roughly 300 million logged in 2013. Last year's figure also marks a 33% increase from the previous year. China was also Korea's biggest customer, accounting for 37% of Korea's outbound cosmetics shipments. Given their heavy reliance on China, Korean cosmetics exporters have begun to worry whether Beijing will expand recent import bans put in place as part of its economic retaliation against the THAAD deployment. China has demonstrated extraordinary growth in patent applications, putting it on track to overtake Japan in just 2 years' time. The World Intellectual Property Organization reports that China's patent applications shot up by 43,000 last year, a jump of almost 45% from the year before. That ups the pressure on Japan, the world's second largest patent holder, which only saw a 2.7% increase last year, putting it just 2,000 applications ahead of China. The organization's director said China's extraordinary growth comes amid a policy shift from made in China to created in China, which is expected to help Beijing surpass Tokyo and eventually the United States. The U.S. held on to its lead for a 39th straight year, but saw the number of patent applications drop by nearly 1%. Korea remained fifth place with an almost 7% increase from the year before. Even though the Bank of Korea's key interest rate has been at the floor of 1.25% for 9 months now, bank-issued mortgage rates have been climbing. In fact, as our Eunice Kim tells us, some are closing in on 5%.
For those seeking a mortgage, the central bank's historically low interest rate feels miles away. Mortgage rates, unlike the key rate, which has been frozen since June, have been climbing. According to data from the Bank of Korea, as of Friday the 10th, a 5-year fixed-rate mortgage from KEBhana은행 topped at 4.83%, uncomfortably close to 5% and an increase of 15 basis points from the end of February. And other major banks are raising as well. KEBGummin raised its ceiling rate to 4.79%, as did Shinhan and Nonghyuk banks to the 4.5% range. Mortgage rates are influenced by the central bank's short-term rate designation, but lenders have also been pricing in rate hikes by the U.S. Federal Reserve. And with a March rate move by the Fed on Wednesday local time, Korea's mortgage rates look to rise even more, especially as the country's housing market is expected to see a surge in demand in the second half. Meanwhile, savings rates at commercial banks remain low near the floor. Figures from January show that while loan interests averaged at 3.5%, interest on savings only came in at 1.5%. The difference of 200 basis points marks the widest gap in 4 years. The low return on savings has been sending investors in search for yield to the property market, further heating up a real estate market booming on loans that are said to become more expensive to sustain. Eunice Kim, Business Daily.
Starbucks has become the first coffee company here in Korea to see its annual sales hit the 1 trillion won mark, or roughly $884 million. The American company's sales in the country rose to $886 million last year, which was a 30% increase from the year before. That's extremely high compared to other Korean coffee brands, whose sales amounted to just 10 to 20% of Starbucks in the same period. Starbucks landed in Korea in 1999, and as the country's first coffeehouse chain, it has about 1,800 stores nationwide. Industry insiders say Starbucks' growth is due in part to its ability to keep its brand image fresh by creating new menu items reflecting local tastes. And that brings us to the end. Thanks for watching. We'll be back tomorrow with more business news that matters to you. Until then, goodbye.